Welcome back to An Orange Future. In this short video, I would like to highlight some key factors to consider when choosing an asset to invest in. Firstly, I am a strong advocate of diversification, and anyone considering which asset to invest in is already a winner in my eyes. It is a well-known fact that if you are on a wealth building journey, you should definitely have a plan to accumulate assets as part of a long-term strategy. In past and recent times, whenever there has been economic uncertainty or an economic downturn, wise investors have always turned to gold as a hedge against inflation or store of value, as traditionally during these downturns stocks usually drop and gold remains stable. However, for millennials and Gen Zers, this tradition does not carry the same sentiment for them, as they have basically grown up in a more digital world or environment. For this generation and more tech-savvy investors, people are now turning to digital gold. Bitcoin. Bitcoin has only been around since 2009, so it would be very unfair to gold to make a 15-year comparison, as the exponential early growth of Bitcoin would create percentage differences beyond comprehension. A more fair comparison would be to look at over the last 5-year period, as this time frame certainly takes into consideration a significant economic downturn, higher than normal inflation, and conflicts in two different continents. In gold's case, it certainly has outperformed inflation, with a noteworthy, credible 59.3% growth since the beginning of 2019, which underlines why you shouldn't hold cash. In the last 5 years, Bitcoin's percentage increase is 1,220%. Gold is less volatile, which means over a shorter period you are less likely to lose. But gold is not as portable and is more difficult to store, but more traditional investors like to physically hold or self-custody their gold. Gold does not have a finite supply, unlike Bitcoin. There can only ever be 21 million Bitcoin once every Bitcoin has eventually been mined. Both Bitcoin and gold can be stolen if the right measures of protection are not taken. Physical gold can be safely locked in a heavy-duty safe or buried in your garden, whichever takes your preference. Alternatively, you can store in a secure vault, but this would incur additional expense. Bitcoin can be stored in self-custody cold wallets, which require stringent protection of passwords and seed phrases to make access of your digital assets virtually impossible to someone without these passwords. This can also be a risk to those people who do not back up seed phrases on metal plates, or who are forgetful where they might have hidden it. So in summary, both offer a store of value in both short and long term. But to highlight just the past year, 2023 alone, Bitcoin is up 158%. Gold is up just under 8%. If you like these short videos, I would kindly ask you to hit the like button. It would be greatly appreciated and help me grow the channel.